Entrepreneurs who set up Hong Kong companies think that they've cracked the code for tax optimization, only to get hit with compliance nightmares 6 months later. And why 6 months? You'll find out soon in this video. All day long we speak to people who think setting up a Hong Kong company means all they have to do is collect payments and forget the rest. But the result? Company getting struck off the register, bank accounts frozen, people scrambling to fix a mess that was completely avoidable. Today, I'm going through everything from A to Z of Hong Kong compliance. So, if you are operating in a Hong Kong company or thinking about setting one up, this video might save you from some very expensive mistakes. Hi everyone, I'm Arturo from Emifast, and we have helped over 2,500 entrepreneurs already to set up and maintain Hong Kong companies and other companies abroad. And here's what we've learned. Most compliance disasters happen in the first 18 months, and they are almost always preventable. We handle everything from company formation to ongoing compliance, banking relationships, and tax optimization. So basically, we make sure your Hong Kong structure actually works for your business and doesn't become a headache. But here's the thing, even if you never work with us, I want to share the compliance mistakes that cost our clients thousands before they even found us. Because honestly, these problems are completely avoidable if you know what to watch for. And today, I am going to walk you through the exact compliance roadmap that keeps our clients out of trouble, the specific deadlines that can shut down your company if you miss them, and the documentation that banks actually require, and also the 3 compliance mistakes that cost entrepreneurs an average of $15,000 to fix. By the end of this video, you'll have a compliance calendar you can actually use, know exactly what documentation to keep, and understand the early warning signs that your company might be heading for trouble. This isn't boring legal theory, guys. This is going to be the practical stuff that separates successful Hong Kong companies from the ones that get struck off the register. Look, Hong Kong isn't some offshore jurisdiction where you just can set up a company and disappear. It's a world-class financial center with real requirements. And when you understand the rules from the beginning, compliance is actually pretty straightforward. So let me break down the key things you absolutely need to get right. First up, annual returns. And this is where I see people lose thousands of dollars for no reason. And every Hong Kong company must file an annual return within 42 days of its anniversary. And miss this deadline by even 1 day, and you will immediately hit with the 870 Hong Kong dollar penalty. But here's what really hurts. If you don't file within 3 months, the penalty jumps from 2,320 Hong Kong dollars. And if you ignore it for a full year, your company gets struck off the register automatically. I had a client who forgot about this and got hit with the 2,320 penalty, plus had to pay over 8,000 Hong Kong dollars in professional fees to restore his whole company and fix his banking relationships. That's over 10,000 Hong Kong dollars for missing a simple deadline by a few months. And here's something else that catches people off guard. Any changes to your company during the year must be reported within 15 days. So change your registered office, for example, update it immediately. New director, report it right away. Miss this 15-day deadline and you're looking at 600 to 5,000 Hong Kong dollars in penalties, depending on how late you are obviously and what type of charge you fail to report. But here's the real kicker. Banks and other institutions regularly check these records, and if they find discrepancies during due diligence, they can freeze your accounts or even refuse services until everything is corrected. So picture this, for example. You move your registered office and forget to update the records. And 6 months later, during a routine bank review, they discover this discrepancy. And now you're facing 2,400 Hong Kong dollars in late filing penalties. Your bank account gets frozen for 3 weeks while they investigate, and you lose a major business opportunity because you can't process payments. And the total costs? Over 50,000 Hong Kong dollars in lost business maybe, plus penalties and professional fees to fix everything. All because of one forgotten filing. So let's talk now about company secretary requirements. You need one, and you can't be your own if you're the sole director. Think of the company secretary as your compliance guardian angel. They handle the paperwork, maintain your records, and make sure that you don't miss important deadlines. So please guys, choose someone good here. I'm serious about this. Their competence directly affects whether you stay compliant or end up in trouble. Now let's talk about accounting and audit requirements as well, because this gets a bit more complex, but nothing crazy once you get the hang of it. You need proper books showing what's actually happening in your business. If your company makes more than, let's say, 5 million Hong Kong dollars in revenue, or has, for example, assets above 3 million Hong Kong dollars, you need a proper audit by a Hong Kong certified public accountant or a CPA, meaning your bookkeeper at home isn't going to cut it. Even if you qualify for audit exemption, I usually recommend getting an audit anyway, because, for example, if you're dealing with banks or international clients, they often want audited accounts regardless of what the law requires. And if you want to sell your company in the future, for example, it's always good to have a yearly audit ready to show to any buyer for your company. Then, profits tax compliance, because this is probably the most misunderstood part of Hong Kong operations. And Hong Kong only taxes profits that arise in or are derived from Hong Kong. But, and this is super important, you still need to file a tax return even if you claim no Hong Kong sourced income. And the tax department will send you a return, usually within 18 months of setup, and you have 1 month to file it, even if your profits are offshore. So you must file that return and make your offshore claim properly. Let me paint you a picture. For example, let's say you're running an e-commerce business, products made in China, sold to customers in Europe and the US. Perfect offshore structure, right? Wrong. When the tax department reviews your case, they find you're managing everything from your Hong Kong apartment, making purchasing decisions from Hong Kong, negotiating with suppliers using your Hong Kong phone number, and the result? They say your profits are Hong Kong sourced, not offshore. So years of back taxes plus penalties, guys. Ouch. And the point? You can't just claim offshore status. Your actual operations need to support that claim as well. So keep that in mind. Now let's talk about banking compliance, because this is something that is getting even trickier and trickier these days. After global scandals involving money laundering and also terrorist financing, regulators crack down hard on banks worldwide. And Hong Kong banks are super strict about anti-money laundering rules. And they are not shy about freezing accounts that don't meet their standards. So, make sure to keep clear documentation for all transactions, especially large or unusual payments, and make sure your business model is transparent and well documented in case of any checks from Hong Kong or any other tax authority. And I've seen these accounts frozen, for example, 3 weeks just because the bank couldn't understand some crypto payments. Everything was legitimate, but they just needed extensive paperwork to verify the source of funds. And that means your company is literally unable to receive payments. Yeah, you don't want to be that guy. Also, you need genuine business substance. Gone are the days of paper companies that exist only on paper, on documents. And this means real business address, proper records in Hong Kong, and actual business decisions happening in Hong Kong. If not, make sure you have the transfer pricing policy explaining what activities you engage in with multiple overseas companies, of course. Let me quickly run through the biggest tips that I can give you right now so you don't have to learn these lessons the hard way. First, never ignore letters from Hong Kong authorities. Never. Respond promptly. Second, never use inadequate registered office services. Your office needs to be real. where documents can be served during business hours. Third, do proper record keeping. You need proper registers of members and directors at your registered office. So, create a compliance calendar, mark your annual return date, tax deadlines, audit requirements, and set reminders well in advance. Most problems come from poor timing, not inability to meet requirements, so make sure you're on time. And before we wrap it up, let me give you the bottom line on what you should actually budget for Hong Kong compliance. Plan for 15,000 to 30,000 Hong Kong dollars annually for proper compliance, and that covers everything from company secretary to accounting and audit if needed, and all the government fees, of course. And yes, this is the real cost, but compare that to the penalties we've talked about. More than 50k Hong Kong dollars in lost business, more than 10,000 Hong Kong dollars in restoration fees, years back within taxes. Proper compliance is the cheapest option, guys. So think of it as an insurance for your business. Much better to pay for prevention than to pay for problems. So what should you do? First, work with experienced Hong Kong professionals from day one, like Emifast. Don't cut corners, and the cost of doing it right is far less than fixing the problems later. Second, maintain proper documentation for everything. And third, stay informed about changes or make sure your providers keep you updated, like we do always. And hey, maybe you found out after this video that your company is non-compliant. Well, don't panic. Most issues can be resolved, though it might involve penalties, but the key is addressing problems quickly. Looking ahead, compliance requirements will likely become more stringent, not less. Companies with strong practices now will be well positioned. Bottom line, Hong Kong remains excellent for legitimate international business, but only if you respect the requirements and maintain proper substance. If you want to ensure you're meeting all Hong Kong compliance requirements, visit us at emifast.com and book a consultation for free. We will review your situation and help you establish proper procedures. And if this helped clarity about Hong Kong compliance, smash that like button, share with other entrepreneurs or friends, and subscribe for more international business insights. Thanks for watching, and remember, proper compliance isn't just about avoiding problems, it's about building a structure that's genuinely bulletproof. See you in the next video.